Hello everyone, welcome again to Hybrid Accounts. So today we're just going to take a look at goods in transit and cash in transit, all combined in a single question. This comes from ACCA June 2012, the question known as pyramid. All right, now I'll just go directly to an example and see what we have to do. We are told that on 1st April 2011, Pyramid acquires 80% of Square's equity shares. That means Pyramid is a parent and Square is a subsidiary, right? Because Pyramid has more than 50%. Then Pyramid sells goods to Square at cost plus 50%. So this is just a markup on cost 50%. And below is a subsidiary, or is a summary of the sales between them for the year ended 31st March 2012, and the balances is the 31st March 2012. Now, this is what we're given, Pyramid and Square. Then we're given amounts, sales to Square, 16,000. Purchases from Pyramid by Square, 14,500. And what is included in the Pyramid's receivables, 4,400. And included in Square's payables, it equals to 1,700. So these are the intra-group transactions and balances. Receivables and the payables are intra-group balances, while sales and purchases are intra-group transactions. We know that we usually have to eliminate these ones. But how do we go about this? All right. We are given further information that on 26th March 2012, Pyramid sold and dispatched goods to Square, which Square did not record until they were received on 2nd April 2012. Now you can see this. The year was ending 31st March 2012, but goods, that means by the year end, the goods were not actually received by Square because they were received on 2nd April. This means that Square had not recorded these goods. And we are told that Square's inventory was counted on 31st March 2012 and does not include any goods purchased from Pyramid. This is usually obvious if goods were still not recorded because we usually record the transaction when you receive the goods. So since Square had not received the goods, it means that Square had not also recorded those goods. So I have to pass double entries to presume that Square had received the goods. So that's the first step. But also it shows us that we have goods in transit here. Some goods are still on the way that Square should have considered, but they are not yet recorded. So I have to pass the journal entries. Additionally, we are told that on 27th March 2012, Square remitted to Pyramid a cash payment. Pyramid sells to Square, so Square was settling some kind of payables. So Squares remitted the cash payment, which was not received by Pyramid until 4th April 2012. So also by the year end, Pyramid had not received this. So we say that this payment accounted for the remaining difference on the two accounts, on the current accounts. What are the current accounts spoken of here? It's these receivables as well as payables. Whenever receivables exceeds payables, there might be a cash in transit or a goods in transit. So if you add cash in transit and goods in transit, you get the difference between the receivables and payables. But for our case here, it's pretty clear that the first line showed us that we had the goods in transit, that is inventory, and the second line showed the cash in transit, that is cash to be received. So I would have to account for both of these. Now, what are we required to do? Determine the goods in transit and cash in transit, and write down the necessary adjustment for both the statement of profit or loss and statement of financial position. So that's what we have to do. That's our task right now. All right, to start, we could count the solution and we presume that all our figures are in thousands. Of course, in $1,000 is given from the question. And now let's start determining the goods in transit. Now, how do you know the goods in transit? Simply speaking, to know the goods in transit, you just take the sales, intra-group sales, and your less intra-group purchases. Because if I sell goods for $1,000 and you purchase goods for that same amount, so the sales I make to you should be equal to the purchases you make from me. If they are different, that means that I had sold something which you had not received, and that's why you had not recorded that purchases already. So to get the goods in transit, you just take the difference. So from the question, we are given the sales by Pyramid, were 16,000, while purchases recorded by Square were actually 14,500. You can just go back and check here. Sales to Square 16,000 and purchases from Pyramid 14,500. And we can go back to the question. So this is 1,500, and that should be our goods in transit. Now, what do we do? As I told you earlier, since Square had not recorded this, Square should pass the journal entries to accommodate this figure here. So we presume that Square has recorded the purchases, which actually we are told that were not entered into the inventory balance. So we say that it should go to inventory, so it's purchase, but also it goes to the inventory count. And also we record the trade payables, because if Square had bought goods from Pyramid for credit, then there would actually be the trade payables balance, right? So 1500, and that's all. So what would be your revised trade payables? If you come to the question here, we are told that the trade payables by Square had recorded only 1,700 payables, but we have evidently seen that there should be an extra payable 1,500 here, this credit. So I would take 1,700 plus 1,500 and obtain a total of 3,200. And you have to remember one thing. We had inventory here, which we had it accounted for. If you have this inventory that remains in the books usually has provision for unrealized profit. Provision for unrealized profit is the profit that was made was made by Pyramid when selling goods to Square, but they are still in the group. That means Square had not yet sold them. So we'll do this later. If for now you can just wait. Let's just go for the cash in transit. Now, how do you determine the cash in transit? What would be the cash in transit here? Now, if you take the goods in transit plus cash in transit, this would be equal to the difference between intragroup trade receivables and intragroup trade payables. That's why whenever there is a good in transit or cash in transit, trade receivables will also always exceed trade payables. So you just enter your values. What is the trade receivable and trade payables? Let's just go back to the question and take a look there. Trade receivables amount to 4,400, while trade payables equals 1,700. So you take the difference there and you arrive at this one figure, 2,700. And this is the sum of goods in transit and cash in transit. But remember that we already have the goods in transit with us, that is 1,500 down up here. So you plug it in there and you end up getting the cash in transit as 1,200. All right, cash in transit means that the buyer has made a payment, but the seller hasn't actually received it. So the seller presumes to have received the payment and will make the double entries here. So if you receive the payment, you have to debit cash. This is what we call cash in transit. But also because here actually Pyramid had sold goods to Square. That means Square was owing goods to Pyramid. So Pyramid had the trade receivables. So trade receivables would decrease. So I would have to credit trade receivables by the same amount. So this is how you record the goods. You make these transactions here. The goods in transit and cash in transit. This one means goods in transit. This one 1,500, and this one the cash in transit 1,200. Right? So this is what you do. Now, in case you needed to revise the trade receivables, the trade receivables before was how much? Trade receivables before was 4,400. Now let's revise it. Since I have credited it with 1,200, then I will decrease it by 1,200 and end up with 3,200. If you take a look, have you noted something here? Listen, the revised trade payables equal to 3,200, but also the revised trade receivables equal to 3,200. This means that they are actually equal, and this is what should have been the case from before. All right. Now, let's go. As I said that we usually have provision for an unrealized profit. Let's determine the provision for unrealized profit now. How do you obtain provision for unrealized profit? You take the percentage not sold out of the group, percentage of the goods not sold, you multiply by the total profit. And how do we do this? These goods were still on transit, so it's obvious that 100% of them were not sold. So we could say that 100%, then times. Then by doing times here, if you have a profit markup of 50%, we are told from the question, right? We are told that pyramid sells goods to square at cost plus 50%. So cost plus 50% of cost means that this is a profit markup. So you should always try to note whether there is a profit markup or profit margin. So in our case, there are we had the profit markup. So as for profit markup, it is 50%. Just take 50 over 100 plus 50. That is 50 over 150. Then you multiply by the total profit. All right? You multiply by the total profit to arrive at the figure that actually you might. Yeah, this was the cost. This was the cost that was made here. Just come here. This was the profit. Look, pyramid made sales of 16,000, but Square had only recorded 14,500. So it was 1,500, the extra inventory that was still in the books. I think I wrote it here. Extra inventory still in the books. Where was it? Yes, in these double entries here, this one, inventory, that is 1,500, right? So you have to use that one. All right, now if you just go back here, you multiply and you would have 50 over 150 equals 1 over 3 times 1,500 would have your 500. But in other words, you could just do this one approach. You can sometimes use this one approach here. That is just fine. When we deal with profit markup and profit margin, most people don't like this, but it's a very, very effective way. Let me tell you one thing. Always, if you need to obtain profit, we usually say that profit equals to sales less cost of sales. So we are given the profit markup, and we know that markup equals to profit over cost. So 50% markup means while profit is 50, cost is 100. While profit is 50 here, I should mean that cost equals to 100. And so if cost equals to 100, what would be the sales? Note that sales minus cost, you get profit. So sales will be the sum, that is 150. And then you ask yourself, the one who sets the markup or margin is the seller. The goods were sold at 1,500, right? This is the value of those goods. So if you make the subject, you can now get the profit. So to obtain profit, you just say profit equals to 50 times 1,500 over 150. And you have your answer up there. So this is how to approach the markup and margin. All right, I think you can proceed now. Now you have the provision for unrealized profit, and you have to make the double entries. Now, in making double entries for provision for unrealized profit on inventory, you just have to ask yourself who received the goods, and who earns the profit, and then eliminate them as appropriate. All right, pyramid sold goods to Square. So pyramid earned the profit, while Square bought goods. So Square had the inventory. So you have to remove this profit from the income statement of pyramid, right? And then you have to remove it from the inventory of Square. Now, I'll make that adjustment at the end. For now, let's just go to other adjustments. First of all, you have to eliminate sales. Let's say we are dealing the income statement. I would have to eliminate sales and the cost of sales by how much? You ask yourself. Sales of 1,600 were made, so I would have to deduct them, but also I would have to deduct the same for 1,600. 16,000, I mean, 16,000, meaning that the same sales that pyramid made to Square, it is the same purchase that Square made from pyramid. If you just come to number one here, you will see this. Look, pyramid made sales of 16,000, but Square had only made it had only appeared that this was 14,500, but in total it was also 1,600, as we saw here. Here we saw that there are extra purchases of 1,500 that also amounted to 16,000. All right. So this is the first that should be done in the income statement, and then you would come to trade receivables and payables. These are what we call intragroup balances. The above one are called intragroup transactions, and now these ones are the balances. So just eliminate trade receivables and trade payables. And I think we had obtained them already. From working through here, I had done this, I said I had trade payables of 3,200 and also I had trade receivables of the same figure. If I remember well, yes, this one's 3,200. So all I do is just eliminate them. So to eliminate trade payables, I'll have to debit them. And to eliminate trade receivables, I'll also have to credit them 3,200. And lastly, now we have the PAP, that's the provision for unrealized profit. Now remember, the parent is the seller. Parent, which is who is Pyramid. So Pyramid sold these goods, and if Pyramid sold the goods, Pyramid had the profit, while Square had the inventory. So I would have to reduce this from the profit of Pyramid. Now, at which line item in the income statement? Since it is related to inventory, I would go and take it in the cost of sales. You know, inventory always resides within cost of sales. So debit cost of sales. But also, in case I was preparing the statement of financial position, I would have debited the retained earnings of the group. Now, note one thing. I would have to debit the retained earnings of the group because the parent is the seller. In the case the subsidiary was the seller, in case it was actually Square that was selling to Pyramid, I would have to apportion it between the group retained earnings as well as the non-controlling interest. But here I will take it in full, all right? Because this it was sold by the parent, and the parent profit cannot be shared. All right, on the other side, I would have to credit inventory. As for inventory, no problem, because when doing consolidation, we usually add. So it does not matter whether it's a parent or subsidiary sold, because those inventories are always added up, so it doesn't matter. So that's what you would have done. All right, thank you very much. And if you haven't subscribed, you can subscribe to the channel for regular updates. Thank you very much, and until next time, don't forget to comment.